Hey, this is Dave, Homes by Sergeant Dave. Today we're going back out to Blue Star Lending, talk with our friend Kevin Dawson, and we're going to get information out on the CalHFA Down Payment Assistance Program. So kind of moving on from our first-time homebuyer programs and getting you a little more detailed information. This is a great program. Let's go check it out. Hey, this is Dave, Homes by Sergeant Dave. I'm your real estate warrior. Back with my friends here at Blue Star Lending, Kevin Dawson.
Good morning.
Today we are going to talk about down payment assistance. We're going to push on from what we talked about when we did down payment assistance, and we're going to talk specifically about the CalHFA Down Payment Assistance Program. So I've used it with clients before. I think it's wonderful. There's things you need to know about it. And
yeah,
that's what we're going to do.
Yeah.
So, what is the program specifically, the CalHFA versus a FHA kind of program? I mean, they're combined, aren't they?
Yeah, so you can do like an FHA or a conventional style loan with these. All CalHFA does is they are providing money for the down payment and closing costs. You can still do FHA or conventional. That doesn't change. The biggest thing with this type of loan is providing money for your down payment and your closing costs, one or the other or both, right? So there's a lot of options available for them. So I would say if you're looking to get into a home with the cheapest amount of out-of-pocket costs to start off with, it's the best option. So pros in this particular situation are going to be things like low amount costs out of your pocket to start with. It's typically a pretty flexible program. You can choose down payment or closing cost assistance or both. And so overall, it provides the best options for you to get into a home if you don't have a lot of cash on hand or access to gift funds, right? Some of the downsides to these loans are they are typically a little bit more expensive on your interest rates. You are going to pay a little bit more on the interest rate to have one of these loans. There's also a few more closing costs associated with them. So you don't pay as much out of pocket, but there's still some more closing costs associated with it. They have to come up with a little bit of the cost, right, associated with paying you some of that money. But overall, it's a good program. They still close relatively fast. We're getting them done in 22 to 30 days. It used to be kind of a nightmare to get these things done. I mean, it would easily be a 45-day close on some of these programs. So still close relatively quick and get you into a home. So yeah, check it out. And you can go to their website as well. You could also give us a call if you have any questions specific to it.
Great.
Yeah.
Kevin, how much money can somebody get for their down payment under this CalHFA program?
Okay, so you can get up to 3% that they'll pay towards the closing or towards your down payment. And then you can either do a 2% of the purchase price or a 3% option for your closing costs. So the more help that you take, the higher the interest rate is going to be. So this is very specific to this type of program. If you do just down payment, the interest rate, let's say, is going to be 5%, right? If you do down payment plus 2%, then your interest rate is probably going to be like 5.8. Then if you do the 3%, it might be like 6 1/8 or something to that effect, right? So it progressively increases as you go up in the amount of help that you're asking for. So specific qualifications for this program, you typically have to have a credit score of at least a 640 to qualify. And then debt to income ratios are typically a little bit lower. They want to see less than 45%. Or if you have over a 700 FICO, you can go all the way up to 50%. So it typically provides a little bit of flexibility in your debt to income ratios. Other qualifications are pretty much just the same as any other program. You have to be employed. You have to have residence history. You don't have to have a lot of assets. Most of these programs are covering a majority of the costs or up to a vast majority, but I would still say you want a little bit of money in the bank. And other than that, I mean, your general credit qualifications are about the same. So it is just a little bit less on the debt to income and a little bit less flexible in the credit score.
Okay, so you're still going to have to be able to show your worthiness to pay.
Correct. All the same stuff there. All the same. FHA or conventional option, either one.
Perfect. Kevin, when you take a loan for your down payment, but you're taking a loan for the house, when it comes to paying back the loan for the down payment assistance, how does that work?
Okay, so you'll have your first mortgage, right? That's what you're actually making your payments on, right? That is what your actual payment will be. Then if you take out the down payment option, you will have what's called a silent second, meaning it just sits on your home as a separate lien. You don't make any payments on it, it just sits there. If you do the down payment as well, then that sits as a silent third, meaning you would have 1, 2, 3 different liens, only making payments on the first. The third is also silent, just sits there and just waits. You have to either when at some point when you purchase another home or refinance it, you would have to pay those off. Or one of the new options that's available for these programs is if you're in the home for 5 years or longer and you do not refinance the loan, then they are forgivable after that 5-year mark, meaning that the second and the third would just be wiped clean. So, but you have to keep that higher interest rate. You can't refinance if rates go down, and you would have to keep the home as your primary residence, meaning one of the borrowers would have to live in it for up to 5 years.
So there's a possibility that, your $15,000 debt that you have on your home, which you haven't made any payments on it, but you stay in the house for 5 years, the state is going to say, all right, you're all good.
Yeah.
That's not bad.
Yeah.
So, these are programs that, they're there, but we just don't get these out to people. People think that I don't have down payment. There's down payment money for you.
Yeah.
My credit score is just okay. Well, okay, in this case
you can qualify.
Is
yeah.
possibility to qualify.
Mm-hmm.
You don't have it a few dollars in the bank helps, because you're going to have other things that you need to do. But so many people think that I've got to save 50, 60, 70, $100,000 before I can buy a house, and
you don't need 20% down.
You
Very
don't.
common.
Yeah, and there are options available to you. Don't just walk away. Look at your options and understand them. So there's going to be a link down below. It's going to be able to get you over to contact my friends here at Blue Star Lending, so that they can answer those questions specifically about this loan program and your eligibility. I look forward to the opportunity to get you out looking for the house that you didn't think you could buy, because you can use down payment assistance in CalHFA loans. So, hey, don't forget to subscribe to my channel, ring the bell, regular stuff coming out. We want to get value out to you. So give us a call. We look forward to hearing from you. Take care.
Bye.